joined by our head of trading, Toby Chapple. Today, we've got a short 40-minute update for you in terms of what's been happening in the market, what our clients are telling us, and how you can invest securely. Over to you, Toby. Could you give us an update as to what's been happening in the crypto markets?
Well, I think, it's suffice to say that all global markets have seen some significant pullbacks, but crypto being 8 times more volatile than equity markets has seen more drawdowns than traditional markets. We've had a number of events occur that are unusual. Namely, we've had a stablecoin break, and that has caused some contagion risk across the space. We've had Celsius, a $25 billion company, mainly full of retail customers, that has fallen over. We have a very large hedge fund called Three Arrows Capital, roughly around $10 billion, that looks like it's going into liquidation on the back of what's occurred. Now, basically what's happened here and what's different from the crypto world to traditional assets is that it's an unregulated space, right? And so what you have is companies and management taking excess risk in this space that you wouldn't in the traditional world. Now, what that means is that we've had some companies that have over-leveraged their balance sheets very aggressively, and they've come unstuck on the back of global markets coming down. Now, what does that mean for investors? Well, it just highlights the counterparty risk in the space. The unregulated nature of crypto means that investors need to concentrate on counterparty risk. So that's the number one thing that's occurring. Now, because there is high leverage in the space, it's caused a cascading effect of liquidations across derivative and spot markets. And we've seen a drawdown from equity highs of around 70% in both Bitcoin and ETH. So what does this mean for the space, and what does this mean for the investor base to access it, right? Now, the most important thing to know, because it is unregulated, that you need to concentrate on where your assets are and how they're held. For example, if you invest in Coinbase or any of these unregulated exchanges, these coins are not yours. They are the exchanges. So in their documents, they will say that you do not own the private keys, you do not own the assets. So during a liquidation events of these companies, you as an investor will become a creditor, and you'll have to go through this horrible process of trying to get your money back. Now, it is highlighting what we're trying to do here at Zerocap is to have a regulated entity and a custodial relationship. Now, the custodial relationship is so important. It's important because it means that the assets that are held with a custodian are your assets. They're not Zerocap's. You can take them out at any time. You can move them around, et cetera, et cetera. They're your assets in a defaulting bankruptcy event. So we've had large risk in the markets come off and to a very destabilizing effect on the market. Now, why has that occurred? Obviously, there's a global macro event risk that's occurred. We've had inflation running out of control globally. We've had the US Federal Reserve raising rates. They may raise another 75 basis the next meeting. This has caused all asset classes to sell off aggressively. We've got equity markets down 25%, NASDAQ down 35%, bonds down 10%. Pretty much everything's come off. But this is the nature of the crypto world, is that we are much more volatile than the traditional space. And this has caused much more drawdowns in our space than the traditional world.
Thanks, Toby. Given that overall update in terms of what's happening in the macro environment, the importance of custodial relationship, could you talk us through how investors should handle a market like this if they're looking to invest in the crypto space?
Look, regulation is coming in the space, but it's not here yet. There are very few regulated entities like Zerocap that can provide a custodial service for your asset classes, right? So any coin you own, you need to protect the private key. And that is basically what Zerocap does as a foundation of its business. We split your key up around the world. We have insurance from Lloyd's of London. But at the end of the day, the fundamental nature of our business is that we are a custodian of your assets. We do not have rights to your assets, they're yours. So if you go and you invest in unregulated entities, you face the risk of the coins not being yours. So the number one nature before you even think about investing in anything crypto is you must have faith in your custodial relationship. You must have a licensed regulated entity and you must have rights to your private keys, right? And so unfortunately, it's events such as this that has occurred in the digital asset space that has to highlight this to the investors and what we're trying to achieve here.
Thanks, Toby. And I think the other component to investing in this space is, as Toby said, crypto is 8 times more volatile than equity markets. Rather than just investing your coins via an exchange, Toby, what are some other mechanisms or investment vehicles that clients could think about when investing into this space?
Look, I mean, it is 8 times more volatile, and that really equates to 8 times more drawdown risk than what you experience in traditional markets. Now, what you need to do is just do a modicum of risk management to your investments, right? You don't need to do a lot, but you need to do something. You need to concentrate on the downside risk of your investments. Even doing a small amount will change the risk-return relationship of your investments. So at Zerocap, we have a number of products that are really concentrated on risk management. We have a smart beta fund that is totally outperformed the market, right? It's trying to equate its risk of Bitcoin to equity type risk. So as we said, we've got equity markets down 20, 25%, NASDAQ down 35%, smart beta is only down 7%, and while Bitcoin's down 70% from its highs. So there are very risk averse ways that you can attack the space and have this fit into your portfolio. There are also other great ways via structured products that we can access the space and harness the volatility, but we'll go through that in a sec.
Perfect. Thanks, Toby. In terms of our clients at the moment, we're seeing all sorts of investors across different segments. There's certainly clients that are looking to dampen volatility, as Toby said, through our smart beta solutions, either through their SMSF or direct investment. And we're also working with a number of advisors in the wealth management space to include that fund into their investment vehicles, such as separately managed accounts and so forth. In terms of our structured products, as Toby said, it's a fantastic way to harness the volatility in this space and purchase, whatever coin you're looking for, predominantly Bitcoin and ETH that we invest in at a lower entry point than what it's selling at today. In terms of, I guess some examples, Toby, that you're seeing of how investors are harnessing volatility.
Yeah, why don't we just go through from firstly what we're trying to achieve in the space by investing in digital assets, right? The blockchain and this sort of stuff is without doubt one of the largest financial innovations that has occurred in the world since the 1970s, and the first futures market was launched. So, the blockchain isn't going away. It's $1 trillion industry at present, right? So what you have to consider in your investments is what's going to be here in 3 to 5 years, and then structure your investments in a methodical way to take advantage of those things. Now, the blockchain is amazing. We have smart contract risk. We've got tokenization of assets. There's a lot of things happening here, right? It's not the future, it's happening now, right? So we know that, for example, the JP Morgan's blockchain is trading $1 billion in the short-term money market in TradFi right now. We've got a lot of innovations happening across the space, and you want access to this in your portfolio as another asset class, but if you have to do it in a methodical risk management approach, I think, to harness it. So how do you go about that, right? So most people just go and buy the coins in the spot market, and they take the upside and the downside equally, right? There are just smarter ways with which to manage your risk management in the space. So at Zerocap, we say you can either get rid of the volatility, which we can through a number of products that are being offered right now, or you can harness the volatility as well, right? So what is harnessing the volatility means? I mean, we've seen volatility spike enormously in our space. So we are offering, for example, entering via the options market can generate significant yield for your portfolio whilst entering at a lower point in time. At present, we're generating something north of 30% yield on your entry and exits into the space. So you have to trust in the mathematics of how you enter and exit these markets. Now, there's something called Monte Carlo path dependency, right? That is a really fancy way of saying it matters where you get in, right? It really does in terms of your return profile. If you've gone and just bought the top in these markets, which a lot of the retail investors seem to do, this drawdown of 70% will mean you've got to make a 200 to 250% return just to break even, right? So have a methodical thought process in how to enter and exit these markets is the way to play it.
Perfect. Thanks, Toby. I think the last piece that we would like to cover, there's been some exciting news overnight in terms of the transaction done with ANZ Bank in terms of $1 and what this could mean for the digital asset space moving forward. A lot of you may have seen that article on the AFR already, but Toby, did you want to talk us through briefly?
Well, I think we just need to talk about why we're investing in crypto, right? Because of the innovation occurring, right? So yesterday we did the first tokenization of a carbon credit, right? So the tokenization of assets is going to be huge, right? It's going to be the future of the space. Smart contracts are going to be huge and very valuable, right? So, you know, we've just launched the first carbonization credit trade with ANZ yesterday. We're looking at doing more things, but at the end of the day, these sort of innovations are occurring very rapidly, and they're occurring now, and you want some aspect of this in your portfolio, but you just need a methodical risk management approach with which to access these risk premiums. Right?
Thanks, Toby. And for investors on this call, you've talked through our smart beta solution, structured products, smart ways to enter this space. What about the coins? There's thousands of coins in this space. What are your thoughts on the future and what will last?
Well, the process of creative destruction in crypto is enormous and very, very quick. I mean, 200 years ago, the process of creative destruction took 30, 40 years to play out. Here it happens weekly. You know, there is a lot of financial innovation occurring through the space. It's almost like a science experiment. A financial science experiment is occurring. Now, with that comes winners and losers. With that comes winners and losers. So it's like, do you want to be picking, you know, the high risk assets with which to play that? No, I would say concentrate on the large coins that will be here for a long time. They will be here 3 to 5 years. And then you can just participate in the long-term future of the industry. Yeah. Perfect.
Thank you so much, everyone, for joining today. That was a brief overview as to the markets, how we're helping investors, and a bit of an overview as to what's happening with ANZ and the future of this space as well. We'll now open to questions.